what the rental crisis means for first home buyers in 2026. If you're saving for your first home right now, this might frustrate you. Over the past 5 years, rents in Australia have jumped nearly 44%. Wages? Just 17%. So while you're trying to build a deposit, your rent is quietly eating it. And here's the hard truth. This isn't just a rental crisis anymore. It's becoming a first home buyer crisis too. Welcome to Realty Reels. Today, I want to break down what this rental data actually means for everyday Australians trying to buy their first home. Because a lot of people think rising rents only affect renters. They don't. In fact, rising rents might be one of the biggest hidden barriers stopping first home buyers from getting into the market. Let's unpack what's really happening. First point is your deposit is slowing down. Here's the reality. Over 5 years, rents rose 43.9%. Wages rose just 17.5%. When rent increases faster than income, your savings shrink. You're not behind because you're bad with money. You're behind because housing costs are accelerating faster than your pay. Right now, renters are spending more than 33% of their pre-tax income on rent, the highest level ever recorded. That's 1/3 of everything you earn gone before tax, which means smaller monthly savings, slower deposit growth, more time renting, and the longer you rent, the more exposed you are to future increases. It becomes a compounding cycle. Second point is tight supply is lifting buyer competition. Now here's where it directly affects you as a buyer. The core issue behind rising rents is supply. Vacancy rates are near record lows. Population growth has surged. We're simply not building enough homes. Western Australia, for example, has seen rents jump around 66% in 5 years. When rental markets get this tight, some renters decide to buy. That pushes more demand into the entry-level property market. The exact homes first home buyers target. So even when headlines talk about a property slowdown, affordable homes often stay competitive. The rental crisis doesn't just hurt renters. It increases pressure on entry-level buyers too. Third point is interest rates won't magically fix it. Many first home buyers are waiting for rate cuts. And yes, lower rates would improve borrowing power. But high interest rates don't fix supply shortages. They don't speed up approvals. They don't create mortgages. They don't reduce construction costs. Often, they slow projects down. Developers delay builds, investors pull back. Fewer homes get completed. During the last rate hike cycle, investor lending fell sharply, but rents surged. Why? Because people still needed somewhere to live, and fewer rental properties were being created. So if rates stay higher for longer, supply may remain tight. And when supply stays tight, housing pressure doesn't disappear. Waiting for a crash might not be a strategy. It might just be lost time. Fourth point is policy changes could have ripple effects. There's ongoing discussion about capital gains tax and negative gearing. It sounds like an investor issue. But if investors sell rental properties to owner-occupiers, rental supply shrinks. That can push rents higher. And higher rents make it even harder for future first-home buyers to save. In a balanced market, that might not matter much, but in today's tight market, it does. Policy timing matters. Changing investor settings without improving supply can create unintended pressure, and everyday Australians often feel it first. So, what should first-home buyers watch in 2026? Right now, supply is still tight. Rental growth has picked up again. Vacancy rates remain low. Construction completions are lagging. That tells us the housing shortage hasn't been solved. And when shortages persist, prices rarely collapse, especially in the entry-level segment where demand is strongest. That doesn't mean prices will surge tomorrow, but it does mean a dramatic crash may not be realistic. Smart first-home buyers aren't just watching interest rates, they're watching supply. They're watching approvals. They're watching infrastructure growth. That's often where opportunity shows up first. So here's the simple takeaway. Rents are rising much faster than wages. That makes saving a deposit harder. At the same time, we're not building enough homes, and when supply is tight, prices don't usually fall much, especially at the entry level. If you're feeling stuck, you're not doing anything wrong. The market right now is genuinely tough. but understanding what's driving it gives you an edge. In my next video, I'll break down which Australian cities are giving first home buyers the best chance right now and where competition may finally be easing. If you want clear property insights without the noise, subscribe to Realty Reels and let me know in the comments. Are rising rents slowing down your plans to buy? I'll see you in the next one.